Hello, how are you? Hopefully, you are doing fine. Today, I'll be covering the Shopify. The ticker name is Shop, and this is the Canadian largest company by the market cap. And if I'm not wrong, that makes it's the largest Canadian company. It beats the Royal Bank, which is 97.356 billion as per the July 8th. And the Shopify, the market cap is 121 billion and 74 dollars. So that's the power of this Shopify. And if you see why, one of the reason is not only because of this is the Canadian company, but look at this another matrix. So it has a huge return. Maybe I'll cover that. Huge returns, even if somebody has invested in a 6 months ago. And the graph is still, if you go on Yahoo Finance, on any other site, the graph is like a snake, is going upward slope, like it's really upward slope, and it's not trying to stop, even when today the S&P is a little bit is down as well. Okay, so now trying to understand what. So I'll try to cover in this video why the return, the financial, basically trying to ask the question why the price rallies so much, right? Why there is so much people are still going it. Is it because of the strong financial? Is it because of XYZ reasons? And does it has any future long-term perspective, and trying to see some risk and form the opinion as usual. So as you are new to my channel, let me go back to the slide and introduce myself. Myself is Pramod Kumar. I am a CFA charter holder and FRM certified. This is my website, riseanalytics.ca. In my videos, I'll cover the stocks from the long-term perspective, and if I find something which is good and like cash something like this, so I'll try to cover that as well, and see if it's good from the long-term perspective, not from the trading point of view. Okay, so in my channel I have a lot of videos done, Apple, Nike, and so many. Last one I think I did Spot and Lemonade as well, right? That's the recent IPO, and certain ETFs. So if you're new to my channel, I request you to kindly subscribe, and if you're new or old, please give a thumbs up so more and more people will like this video. So without any further delay, let's get started. Okay, let's go to the return. I already have explained this makes a very, and this is honestly a surprise, because Royal Bank is not a small bank if you're not from Canada or US, right? So from the Royal Bank of Canada is one of the top bank, and is also has a long history. I think it's over 100 years, but it certainly is a very old and very large cap. And the company which is Shopify, which is very new company, not is a few year old company, which really beat is the most valuable company, Canadian company. So that surprised when I was doing this video. Honestly, that's the reason I have put it there. So let's go. So can you make a guess, honestly? If you want, you can just pause this video and see if you have invested in Shopify in like 6 months ago, how much do you think the stock will go up, right? And given we have it in the coronavirus time, and the market is doing very bad, right, for all other stocks. So what do you think on from that perspective? And if you do you think is a 50%, 100%, or, and let's go take a question back. Maybe what about if you go to like 2018 in December, not even the starting or the end, how much do you think the stock will go? Is it will go 100%, 200%? And if you want, you can pause and write your answer just for a fun, right, and see what will you see. Okay, for me, I cannot pause. I have to go and show you the answer. So here you go. Cannot believe that, right? So it's almost 150% in from this is only in 6 months the stock rallies, right? And if you have invested luckily in the stock in December 2018 and up to now, which is pretty much like 1.5 years, 7.5 times the stock. So if you have invested 100,000 in the dollar terms, you will have like a $755,000. Maybe you can retire if you have correctly identified this stock at that time, the power of the stocks. And how about this return, right? It's not as bad as well, right? If it's almost going double of your money, right? Okay, so that's how so many people are still believing that. So okay, so let's see its financial and see what's making this crazy numbers, right? It's because we don't really see that in any other regular normal stocks. So if I go directly into the patterns of the 5 years, and then I'll also show you the quarterly the pattern. Although the one thing is surprises me as well. Look at the bottom line, right? This is the net income and the revenue in the blue. Net income is consistently negative, which is very, very bad, right? So net income, the company is not making any income. That's what it is. But revenue is spike, right? So if you see the revenue, the dollar amount of the revenue is, it's going up, right? So it's right. So that's going up. But come on, the net income is negative. So why the stock is crazy up? Why people are buying that, right? That's honestly the first question. Maybe it has a good cash flow and all. So let's see that. The second thing which I want to also highlight here is that this is the yearly, but we'll see the the 2015. So that's a tremendous amount of the revenue growth, almost 100% in 15, 16, right? That's a huge amount of revenue. So the company is doing the good job in increasing the top line of the revenue. Okay, and but now but the percentage of growth of the revenue is declining, but that's not as bad, right? It's still close to 50 in terms of the revenue growth. So that's good, but it's declining. So it's declining, not like upward sloping in the normal business. The next thing is easy to see is on the margin. So their margin is the gross margin is the above 50%, which is way good, right? But right in terms of the gross margins. But the problem here is even their operating margin is negative. So come on, give me a break. You don't have operating margin even positive. So that's crazy, right? It's going negative, right? So what next? If I compare with the net income with the cash flow, so they do have the cash flow from the operating, but it's not enough to cover their the losses, right? So look at the losses. It's downward sloping, right? So that's what it is, and it's keep increasing, and it's keep increasing. That's what is good to see here as well. Actually, not good. Hopefully, I didn't cut any video. No, that is good. Okay. Now the next is that's the yearly. Now let's see the quarterly. And for the quarterly, because of the data heavy, I'll like to basically take this. So this is what I'm trying to show here with the latest quarter, 2, 3, 4, 5, 6, 7, 8 quarter back to June 2018, which has give us the very good trend. And then is breakdown to the revenue. What's the cost of the revenue, the gross profits, and the loss and the net income. So income statements basically. So if I see the revenue is divided into broadly two different segments. One is the subscription segment basically, and the another one is the merchant solution. Basically, they provide like a POS kind of a systems to the brick and mortar stores, and from there they collect the money. And then I'll cover they have another business model as well. But this is the broad two category what they have. And subscription revenue is I like it is good because it's the recurring revenue. So basically, once you hook to their network or take the platform, they started with the core e-commerce platform, right, to give the website and checkout and phone and all those flavor, and then that's their core platform, and then they add it on top. So that's how. So this is their core, and their core is, if you see from this, so this is the latest, and then this is the old. So it was 45%, but it now is 5% almost decline as compared to the last 8 quarters. But their merchant solution is only increased by 6%, right? If I take that 54 point, it actually is even 5%, right? Growth. there. So it's growing, but only 5%, and but it's drop on other side. I really like to see the subscription going up. In terms of the another reason why I like to see, because if you notice the cost of this providing the solution is only 8 to 9%. It was 10, but they manage it, and seems like they come back to 8%. So think like that. If they increase the subscription, switch this solution to, I'm not sure why they're not focusing on that, to the subscription based model, they have 90% in terms of the gross profit, right? That's a huge game changer, right? But the company is uh, seems like unable to do that. Because why? Because it's dropped in terms of the subscription services. One thing I can for sure say, because if you highlight this in the gross margin, marketing sales, the marketing is quite heavy, 30 to 30% of their revenue, right? And the revenues keep increasing, and with the revenue they keep increasing the sales and marketing. But in due to even because even from 30% they are not able to increase the subscription model. So that's the irony, why people are not going and using their platform for the subscription. So that's the one question mark for me. I didn't put a highlight, but I just want to plug say, so don't go for the number. So these are kind of a question we need to ask. Okay, from the research and development, another there. From the gross profit margin, again I have already showed it to you in the yearly basis. This is on the 3-month very diluted quarterly basis as well. So this is 50-55%. That's good, but this is still a question mark, right? So again, because of that, they have a loss from operating, which is in the 15% ballpark, which, if you can think from one perspective, if they reduce their sales and marketing number to 15 to 0, or let's say, then this will be 15% up. So this means then they don't have the, at least the operating income is 15%, but then they have to pay taxes and all. But now the question is, maybe they have to spend that much of money to keep the people on their platform, right? So that's very costly, right? So that's one thing to note there. That's only the time will tell, right? So that's okay. So that's the, and then for sure they have a net loss, which is showing here, but that's the key thing I need to tell it to you. So that's why I highlighted. Okay, let's go next. Okay, another thing which I like to highlight. So this is the 3-month basis comparison. I'm only showing the key. I also key data here to otherwise I did a lot of analysis on this. On the cash from the financing activity, if you notice, they keep issuing raising the money from the finance activity, right? So they have diluted the shares and generating the money. Although they did that, still their cash flow is decreased by 94 million, right? So that's a very big why, because of their operating cash flow is negative for the first 3 months. So this is only 3 months of the data, right? As compared to the last. So what it implies? So this implies, if their cash flow is negative, this means, if I go back to the other slide, the merchant solution, because of this 60% merch, the income is coming from the people who's taking the pause solution now, and these are the small business people, right? And the market is closed because of because of that. Actually, is the first 3 months that was not as bad. I'm trying to see what will cover in the next 3 months, because the report is due on the end of this month. So maybe that sales will be even worse, right? Because if the first 3 months, if the cash flow from the operating is negative as compared just by the last 3 months, this mean so that's a very negative sign, right? Think from that, right? When the small business is closed because of the coronavirus, maybe it will be even worse. So maybe you never know, because the company is selling also the shares to grab those $1,000 or USD market and raise some money there, right? So but until how far they can do. Okay, so that's another thing we need to watch out in the July report. Okay, let's continue. Okay, so this is the risk side. I didn't put the title. So this is before. So this is their contractual obligation, and these are unconditional. Look at here, right? Unconditional purchases, what they have, like operating leases, maybe they have it within the this is a 50 million, 96 million, and it's keep growing. This is growing like a crazy. Look at the more than 5 years, right? From now, it's 327 million and 555 million in total, right? So, so this means if the company won't have able to generate the cash flow properly, how they going to pay that much? And this is not, this is the unconditional office leases expenses. This is just the office expenses, what the company has, right, to pay. And certainly if you want to pay something, you need a cash. You cannot just say, okay, I'll pay you X and Y. No, you need to pay the cash to on these ones. If you won't generate, you cannot just spend so much on the marketing side and do that. Let me know your opinion on the comment, what you think on that. Okay, now if I say see from the another ratio which I like to see, because I have nothing to see. So from the price to sales perspective, they are insane, right? 68 times based on their price. Although, so what it's trying to showcase here, so before in the, so they are in the maximum, it was like 39.40 or in the 20s range, which looks okay. But even if their revenue growth 100 or X or 50%, right? But still it's not even to justify the 60 times. Why somebody will pay that much price, right? Honestly, from the finance perspective, it doesn't make any sense to me. Why you pay somebody, if somebody is earning $1, can you pay them $68 to pay? Right? Maybe the speculation is, okay, it will go X or Y number of times. You pay like, okay, I'll pay you 20 or 30, like worst case, right? At least I'm not that person, but still from the speculation perspective, but still is very high, right? 68 times. This is crazy in terms of insane in terms of the valuation. So now my biggest question is, what makes the price rally? We see there, if I'll see from the another, the quality of the financial is, if I need to rank from 9, I'll rank maybe 2 or 3, right? So that poor they are, right? From the financial perspective, but still the price is rally, right? So what answer that question? So that answer basically, I find that is the people, this, let me tell you in the next slide. So the first one is in the merchants, right? So they are global business. That's what I find. And they have 1 million merchants across. So 175, they are in 175 countries. And so this is the global platform, and they are growing globally. That's, I think they're going globally to the small business sector. So in United States, although this is a Canadian company, but they are only in, they are more in the United States, 52%, which is a very, very big market, right? 52% of in the United States, and they can grow there, and only 6% in Canada. And rest of the country is 29%, right? And Australia 6%. So the major the countries are. So that's one reason I think of. The another reason I think, which I like to, and a couple of reasons I will give you to multiple. So based on this, so this year they did a partnership with the Walmart, right? So Walmart collaborations they did, which is, I think the investor community, they like or not, they did the partnership with the Facebook. So that's a game changer. But the major game changer, what happened when they acquired in 2019 and acquired 6 river systems to the warehouse fulfillment solutions. So rather than have just a e-commerce solution platform, now this company is over that. So this is no more the e-commerce solution platform. Why? Because now I think what I find after 2019, people start comparing with it is Amazon, that this is more like Amazon, but its store is even better than the Amazon stores, and it's collaborating with the Walmart and the Facebook. and all others. So I think that's the game changer. People are trying to compare with this Amazon, and if you go to the Yahoo Finance or any other site, you can see that the price really start moving after this. Okay, before I go there, I like to basically add few more points there, which I think I haven't. So one more thing, I think I didn't put in the slide, but I like to share that. So this is not only the e-commerce or platform, so they are also some of the business. I haven't covered that stock yet, but I know one of my YouTuber subscriber has asked me on the Square, so I'll for sure I'll try to do that. But on the Square business model, what Square did it, they give loans to the to their small business people, right? So so they also has the small business loans there, but the two risk but they also had that solution. So they are in the multiple channels. So in terms of the doing the business and all, so they are very doing the diversification and add that. But two key risk elements which I like to add here is they are into the cloud computing, right? So the cloud computing is they are based on one cloud subscriber. So it's pretty bit technical, but I think it's always good to diversify into multiple. What if their cloud that cloud is down, or some XYZ? So they haven't mentioned that, but that's what I have read. So it's good to split, especially when you are such a big market cap company. I know they might be doing that. And second thing is their payment solution is right now totally on that one company, which is called yeah. So they are saying that we are currently relying on the single supplier to provide the technology we offer from the Shopify payments, and they clearly mention their name is the Stripe, right? And this is automatically renew on the 12-month basis. What will happen if they try to deny it, and then if you're dependent on one company and Stripe? Honestly, I'm not sure how big the company is, but what if the company goes bankrupt? So this means their whole business lies on the payment goes bad as well, right? So that's another key to look into that from that perspective. And the third, and yeah, so that's from the, so we have seen this from the finance perspective. The company is not very good. It's pretty bad, right? Very, very bad in terms of the finance perspective. But from the business perspective, yeah, it has doing the right things and trying to grow from the business side. And I think from if the company can also convert the business model and try to develop it perfectly, this can be another you never know, another Canadian Amazon. But at the moment, if you want, we cannot just go and buy the shares at this crazy insane price. But I think it's fairly understandable on these reasons why the price is going up. But if the next quarter, because of the merchant solutions, they get more companies not paying them, so the share price definitely going to be penalized if people are not that crazy to buy and going and buying and buying. Certainly this can be a good long term perspective, if but not at this crazy valuations. We need to see if the price goes down. Okay, so that's it from my side. And if you kindly like, do subscribe, and especially like this video, gives a thumbs up. It shows the appreciations that you like it, and more people that's way able to see and watch this video. And if you're new, I'll request to subscribe to my channel and share with your friends and family to have built this investor community. And if you want me to cover any other stock, do comment below, and I love to do that for you. Thank you very much, and see you on next video, hopefully soon.